Welcome back to Trade 360. I'm Diane King Hall. We got mixed market action at the moment as investors pull back a little bit ahead of the Fed's decision on interest rates. Joining us now is Robert Schein, Chief Investment Officer of Blanke Schein Wealth Management. Robert, thank you so much for joining us on set here. Let's talk about overall market momentum. Although we're seeing a little bit of a fade, the S&P 500 still got a gain. We've been seeing record after record. We are full speed ahead with earnings season now. How would you characterize where we are within the earnings cycle?
So up until this week, we had 32% of the S&P 500 already reported. We've got both top and bottom line strong growth, at least considerable, it's hanging in there. This week is about 19% with the Mag 7. So this is the blockbuster week, especially after today's close, tomorrow's close. It's going to tell us everything we need to know as it relates to how tech and how the earnings season will play out. Right now, earnings are hanging in there, fundamentals are fine, and momentum's continuing to be strong.
So technology has regained that momentum that we saw last year after, the shock at the beginning of this year, right? Not all technology has been created equal within this sector. Where do you see potential? Do you see technology, kind of reclaiming that pole position throughout the balance of this year?
Yeah, so since April, technology has now reclaimed the lead. And so we're going to see that continue the back half of this year. I firmly believe that. And then it's also about, on the earnings calls, what are the tech companies saying? Where is their AI spend? How much are they continuing to lean into the AI? How much are they spending? What's their commitment there and their conviction?
Let's talk a little bit about volatility. It's a theme I've been hearing today. But, when we look at the VIX, it's sitting at around just a little above 16 today, barely moving the needle. Historically speaking, it's not that bad. But I'm starting to hear this theme about the expectation for volatility to pick up through the second half of the year. Do you see that happening?
Well, the seasonality of August and September and October, that's usually when we see a volatility pick up. So the VIX right now, 15, 16, it's tame. But we could see that pick up because the uncertainty of the back half of the year. What does it look like? We've already passed the bill, so corporations, both big and small, have some certainty in terms of how to plan for CapEx spending, let's say, or incentives that they're going to get. And then we also are going to be looking at the Federal Reserve. I think that's the key here, and that's where the volatility will come in, because today's Fed meeting, we're going to probably get no cut. Everything's strong, 3% GDP print today. So I think that's where we're going to see the volatility in the next quarter, if you will.
So, right, we're not expecting a cut today. And I wonder if, given today's economic data, does it take September off the table, too?
Yeah, that's going to be the question. It's going to be the question of what, it's not so much what the decision is from the Federal Reserve, it's what Jerome Powell says, right, the Fed chairman. And so I think he's going to hold his cards close to the vest. He's going to say data dependent, and he's going to leave the optionality on the table for September. We believe September we will see a cut, and then subsequently maybe in December.
And Robert, let me ask you this. When you think about that $7 trillion of cash sitting on the sidelines that many have talked about, if you had control over all of it, where would you direct it? I know you have some stock picks, and I know it may not necessarily be to all of them, but where would you direct that $7 trillion? Yeah,
so you want to, cash is a great tool and an asset allocation sort of sleeve in everyone's portfolio. Treasuries are a great spot for a portion of that cash. Keep it handy for when we do see that volatility in the next quarter, and then you can deploy it. There are some stock ideas here that we like in the technology space, AMD. We also like Apple. Apple is going to report after the bell tomorrow, and it's going to be interesting. Apple's down 14% year to date, and the S&P is up 8%. So even that divergence right there, there's a good buying opportunity based upon what Apple says. So
you think Apple has a chance to catch up with other members of the Mag 7? And is it more of a, maybe not catch up, because look, it's less than 6 months left in the year. Is it more of a, this is a 3 to 5 year time horizon?
Yeah, so I don't know anybody who doesn't own Apple, especially if you own, let's say, an S&P 500 or NASDAQ, let's say, ETF. But that being said, it's a great opportunity to take another bite at the apple, if you will, because I think Apple, even if they disappoint on their guide, post earnings, in the stock trades down. It's a good opportunity to either add to your portfolio with Apple because it's down, and I think there's huge innovation. The question is, what's their strategy moving forward, and what's their AI strategy is what everyone's looking for. Are they going to acquire Perplexity an AI opportunity there, or on the hardware side, let's be honest, they have 2 billion iOS devices for an install bit base. So you could easily see what they have to do is just hardware refresh. Let's say it's a slim phone or something different, and immediately you're going to see a boost.
Let me go to, I know you mentioned AMD, but I want to get over to a stock that is not within the tech sector, because I think the story with AMD is a little more obvious. DR Horton is on your list.
Yeah.
Why is that on your list?
Well, it's underperformed with the sector as well, but it's the strongest, the number one home builder in America.
So the best house on the block?
Yeah, it's a good one. Yeah, best house on the block. And, if we do see, we believe, interest rates fall back half of the year, real estate the last, 2.5, 3 years has been frozen. Basically, it's a suspended animation. So homeowners need a relief on the mortgage side. DR Horton can take advantage of that. And 15% of the U.S. GDP is housing. So housing is sort of that component that we believe the administration wants to unlock. That's why it's pressuring Jerome Powell to lower interest rates, to provide that relief to consumers, to get that component of the GDP working again. And I think DR Horton is in that space where it can take advantage of that.
All right, Robert, thank you so much. Appreciate it. All right, our thanks to Robert Schein, Chief Investment Officer, Blanke Schein Wealth Management. Our thanks again to Robert.
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.